Before I begin to this video, let me give a quick disclaimer. I am not a financial advisor. The content of my videos represents my personal opinions and is provided for informational and entertainment purposes only. My information is not intended to be legal, financial, or an investment advice. Always conduct your own research and due diligence before making any financial decisions. Remember, it's your money. Please make informed decisions that are right for you. I'll never ask you for money, nor will I provide my phone number or personal email address. If you encounter any suspicious accounts or messages claiming to be me, please report them immediately as fake or scam accounts. Welcome everyone, both new and returning viewers, and Happy New Year. Welcome to 2026. I hope this year proves to be a profitable one for you, regardless of the macroeconomic narratives dominating the headlines right now or in the future. At Data Investing, we are very clear about one thing. Fear and greed are not strategies. Headlines are not strategies. Opinions are not strategies, as well as breaking news and strategies. What allows traders and investors to remain profitable across both bull and bear markets are strategies built on sound mathematical, probabilistic and statistical edges, all backed by data. And that is exactly what the data investing community focuses on. In this week's market summary, we'll begin with a recap of the key global markets we track here at Data Investing, comparing year-over-year performance from 2024 to 2025. We'll then review the past week's trading activity across these key markets, followed by my assessment of both the short-term and mid-term trends. After that, we'll take a closer look at the market internals of the NGX All-Share Index, and finally, we will wrap up the video with my key takeaways for the week ahead. Let's get started. In my opinion, before beginning into 2026, it's important for us to also reflect to see how the year 2025 went for both investors as well as positional traders. At Data Investing community, we track these 10 markets because we have vested interest in this market in one way or the other. US large cap stocks, which we track by VTWO, Nasdaq, US small cap stocks, Canadian stocks. A new addition to the family, the ASX 200, which tracks the Australian large cap market, and you can measure with the performance of the ETF XJO or the Index XJO. Nigerian equities, which we track by ASI, oil, which you can track by United States Oil Fund, Bitcoin, which we track by the ETF GBTC. We are not tracking Bitcoin directly, but rather the ETF GBTC. World stocks, so the global stocks across the world with the ETF VT, as well as the commodity gold. I understand there are more markets that are important to different viewers, maybe in the UK, France, and different parts of the world, but here at Data Investing, this is our core focus. You could say, why not silver? But again, we are just trying, based on the resources available, these are the markets we focus on. Now, the most important takeaway here is that across these 10 markets, how did they fare well in 2025? The green shade here represents 2024 performance. The dark shade represents 2025 performance. The markets that stood out in terms of performance are color coded in green fonts, and clearly you can see Canadian markets, Nigerian markets, world stocks, as well as gold. Across these identified markets, gold had the highest performance in 2025 with 64%, meaning if you started the year with $1, you will have grown your portfolio by 64%. That's the meaning. That's what this means. Removing dividends, this is just based on share price appreciation. So if gold ETF pays a dividend, means your return will be even higher than 64%. Nigerian market also stood out at 51%, even outperforming its 2024 return. You can see it, which was 38%. In Canada, we can also see that the market in Canada actually did well this year compared to the previous year by 6 percentage points. I want you to pay attention to the labels like color coded red, which are Bitcoin as well as oil. So you can clearly see in 2025, if you had put your money in Bitcoin for the whole year, you're actually down. And this is why I always say emotions doesn't make you profitable in the market. You have to trade the trend. Similarly with oil, again, as a short-term trader, you could have well traded the counter moves, the corrective moves, but I'm talking about positional traders as well as long-term investors. So this year was not the year for oil. You can clearly see it wasn't the year for oil as well as for Bitcoin. The US large cap market, which is the S&P 500, kind of underperformed last year. You see, last year, that means 2024 in this case, returned 25%, but in 2025 it was 16%, which is still, it's great. It's not like it's not great. It's significant for you to be able to grow your money or your wealth by 16% in just 1 year. When we also look at the Nasdaq, you can see it underperformed the previous year. When you look at the US small cap stocks, you can see it's relatively flat year over year. So even with the decline in interest rates, we haven't really seen their effect in the US small cap stocks because it's almost flat year over year. ASX will say is flat year over year. Now, having understood this, I put this graph here for you to see how people grow wealth, right? Meaning, first day of the year, you invest, put your money in one of these stocks. Hopefully, you put your money in gold. You had made 64% in 2025, doing nothing, just by putting your money and it to work passively for you. Similarly, if you have put your money or if you had invested in Nigeria, although there is no ETF that you can actually buy that tracks the entire market, but this index, which had a return of 51%, is just telling you that overall the market progressed by 51% in 2025. Please have a look at this picture, understand what it means, and hopefully you can see the value of investing in the stock market. Let's move on to the next chapter where we review last week's performance in the market across these 10 key markets. Some mandatory housekeeping before we get into the review of last week's session market returns. A bullish trend is identified when the close price is above the 20 EMA and the plus DMI is above the minus DMI and the ADX is above 20. A bearish trend is identified when the close price is lower than the 20 EMA, which is the exponential moving average, the minus DMI is above the plus DMI, and the ADX is greater or equal to 20. Whenever I cannot detect a bullish trend or a bearish trend from the charts, which can be either on the daily time frame where I infer the short-term trend, or the weekly time frame where I identify the mid-term trend, I identify a neutral trend, meaning it's neither bullish nor bearish. WTD stands for week to date, YTD stands for year to date. That means from the first trading day in 2026 to the current date, which is also always labeled here. PY in this case stands for previous year, which accounts for 2025 annual returns. Let's begin this recap with the US large cap stock tracked by the ETF VOO, which delivered negative 0.63% this past week. It's just new into the year, and so VOO has delivered 0.19%. I think it's still too early to also compare to 2025, but you have the numbers here in case you want to see, how far it has to go to at least break even with last year's performance. I wouldn't be speaking about last year or making a comparison with last year's performance because it's too early, but it's on your screen for you to just have a feel of what this asset did in the previous year. And so that can be your reference for how it's going to perform this year. Now, based on technical analysis of the daily time frame, I'm able to decide that in the short term, the trend is neutral. Similarly, technical analysis on the weekly time frame or the weekly chart shows that in the midterm, the trend is also neutral. The Nasdaq, which we track with the ETF QQQ, delivered negative 1.13% this past week. Year-to-date performance is minus 0.19%. In the short term, the trend is neutral. In the midterm, the trend is also neutral. US small cap stocks, which we track by the ETF VTWO, delivered negative 0.59% this past week. Year to date, it's up 1.02%. Short-term trend on the daily time frame is neutral. Mid-term trend on the weekly time frame is bullish. We move to the Canadian equities, which we track by the ETF VCN. This week delivered negative 0.48%. However, year to date it's up 0.56%. The short-term time frame is bullish. The mid-term time frame established from the weekly time frame is also bullish. The new addition into the block, which we want to begin tracking this year, is the ASX 200, which stands for the Australian large cap market, which we track by the NGX ASI. This week, the index fell by 0.57%. Year to date, the index is up by 0.15%. In the short term, the trend is neutral, as well as in the midterm, the trend is also neutral. The Nigerian market, tracked by the NGX ASI, which is the all share index, this last week gave positive 1.92%, and year to date, the index is up 0.57%. My analysis on the daily time frame shows that the short-term trend is bullish. Similarly, my analysis on the weekly time frame proves that the ASI is bullish in the mid-term. We move to oil, the commodity oil, which we track by the ETF USO. Week to date delivered negative 1.27%. Year to date, oil is down negative 0.29%. And you can see that last year, oil actually made a negative return of 8.46% down. That's why it's color coded in red. Again, when I looked at the daily time frame, the short-term trend there looks to be neutral. We'll see how the news of what just happened between US and Venezuela, we see how it's going to affect oil. But remember, here at Data Vesting, we don't trade news, we don't trade hype, we trade data. We trade the trend. Similarly, on the weekly time frame, the trend for oil is neutral, meaning the midterm trend is also neutral. Bitcoin, which we track by the ETF GBTC, this week posted 2.60%. Year to date, GBTC is up 2.60%. You can also see it's even superior to the overall last year's performance, which was down 7.65%. In the short term, GBTC is exhibiting a neutral trend. When we look at the midterm, GBTC is showing a bearish trend. World stocks, which is world equities, which we currently track with the ETF VT, was relatively flat this last week with a return of negative 0.01. Year to date, VT is up 0.74%. The trend on the short term is neutral when we look at the daily time frame. When we also look at the weekly time frame to infer the midterm trend, we see a neutral trend. Lastly, gold, the commodity gold, which we currently track with the ETF GLD, this week posted negative 1.33%. Year to date, gold is up 0.50%. Remember, last year, across the markets that we track at Data Vesting, gold was the top performer with 63.68%. We're looking forward to see if gold will be able to, even beat its performance last year. Yeah, let's watch gold and see how it performs. On the daily time frame, we are able to detect a bullish trend in the short term. When we also look into the weekly time frame, we are also able to detect a bullish trend in the midterm. Let's shift next to the NGX market internals to detect what sectors and what stocks, or in general the overall health of the NGX ASI market. As we go into the new trading week in the NGX market, it's important to be able to see what information or what insights we can get from the market internals. Again, this is a data-driven look at the breadth and strength of the Nigerian stock market, specifically looking at the NGX ASI, which is a basket that contains 144 stocks, as at yesterday, in the Nigerian stock market. There's also the Nasdaq, but that's not our interest at data investing. We only focus on the NGX ASI. How to read this report? We have a tag of green where we have a strong market with broad participation across sectors. Remember, the 144 stocks are the individual components which belong to different sectors, ranging from consumer goods, oil and gas, industrial, financial, insurance, and so on. We can also have a bullish market, but with a neutral rating, because only few sectors are contributing to the rally. You can also have a market that is weak, both technically as well as in participation. Based on this insight, let's look at my rating for the NGX All Share going into this week. The NGX All Share is given a yellow rating, which is neutral, and in this case bullish, because the market is actually doing well. But the issue I have here is that there's fair participation, meaning just few sectors are actually contributing to the rally or to the bull move or the bull whatever bullish trend that the ASI is issuing. Again, to come into this conclusion, here are the key technical indicators or KPIs that I measure. The first is, what is the percentage of stocks within the NGX ASI that are trading above their 50-day moving average? The 50-day moving average is a very important metric that helps you decide how many stocks are under the control of buyers versus sellers in the intermediate time frame or the long term, whichever you want to call it. But let's just stick to mid-term. The long term is very much far in the future, which, trust me, no one knows. Any news can come that can disrupt the market. So that's why I always go with mid-term. This week that we are going to, 61% of stocks in the NGX ASI, which I said there are 144 stocks, so 61% of them are actually trading above their 50-day moving average. You can see this is a almost 12 percentage point change from the previous week, which was 49%. When we also look at the foundation of the market, that's where we look at the 200-day moving average, and specifically we want to know the percentage of stocks that are trading above their respective 200-day moving average. You can see that the week that just ended, 76% of them were actually trading above their 200-day moving average, which was a 3 percentage point increase from the previous week. Also, using Weinstein stage classification, we can see that 60% of stocks in the NGX ASI are tagged as stage 2 advancing, which is a 5 percentage point increase from the previous week. Also, when we look at the stocks in stage 2 that are also in a strong uptrend, you can see that last week ended at 35%, meaning 35% of stocks in the NGX are in a strong stage 2 uptrend, which was a 7 percentage points increase from the previous week. Now, remember I said the NGX comprises of different sectors. Now, when we have created these two tags here, and this is what helps a trader know, for example, what sector he initially wants to look for opportunities. Now, when we look at sectors, or what sectors or index are tagged as strong advancing, meaning they are in a strong stage 2 uptrend. The NGX ASI is in a strong advancing uptrend, which is positive. That's why the market has been very exciting of late to participate. The market is just going up. Similarly, the NGX 30 is also displaying a strong stage 2 uptrend across all the sectors, and this is why I tagged it as narrow or fair participation. Remember, there are over 8 sectors, or if not, but only one of the sector is actually in a strong stage 2 uptrend, just the consumer goods. And I'll say since December, the consumer goods has always maintained its presence in the strong stage 2 uptrend classification. So if you have stocks in the consumer goods, I'm sure you'll have been seeing a lot of green in your portfolio in the month of December. Other sectors which are either advancing, remember this first row is not just looking at advancing, looking for those who are in a strong uptrend and are advancing. Now, when I just lump the others together. Either they are advancing, so that's the difference between these two. They are advancing, but they are not in a strong uptrend. Or those that are declining, they are all lumped together here. You have the other sectors of the market like industrial, oil and gas, banking, and insurance. The industrial is actually advancing, but it's not in a strong uptrend, right? You can also see the insurance to be advancing, but not in a strong uptrend. So this is how you can track the market to know which sectors are hot, which sectors are advancing, and which sectors are declining. As usual, market internals helps us see beyond the index. Are many stocks and sectors participating in the move, or just a few? Before we end this week's video, I want to tell you a story about Trader A. Trader A has a system that helps him to identify what sectors are strong, meaning compared to the overall market that he or she trades, what sectors are actually leaders. He then uses technical analysis to fine-tune or refine his entry using a set of indicators from a plethora of technical indicators available in the technical literature. This video is not for me to tell you what indicators you can use, but to tell you or tell you a story about Trader A, who identifies strong sectors in the market he trades, goes long when his entry criteria are met, or looks for hot stocks, meaning the strong stocks in those hot sectors, and also looks for technical confirmation to time his entry. This is how Trader A has been trading. Don't you think this type of system will benefit you? Let me also show you what Trader A also does in bear markets, or whenever the market supports bear or short trades. Trader A also has the same system. He's able to identify cold sectors, meaning sectors that are weak compared to the overall market. He then shorts the market once his technical indicators give him confirmation. Additionally, he can look for cold stocks in cold sectors and then use the same technical indicators as a confirmation tool to short the market. Now I want to ask you, over 100 trades, who do you think will fare better? Trader A or Trader B, who is jumping from different Telegram groups or different news sources to look for opportunities? When year 2026, I want you to be intentional about your trades, and hopefully you see progress in your trading activities in the market. As we wrap up this week's market summary, the key takeaway is balance and selectivity. Across global markets, we are seeing a largely neutral short-term environment, which tells us that this is not a market for emotion or aggressive positioning. At the same time, there are clear pockets of strength, notably in the Canadian, Nigeria, and gold market, where both short-term and mid-term trends remain constructive. I want you to know that this divergence across different markets is important. It reminds us that opportunity is rarely uniform across markets. Capital flows where conditions are favorable, and your job, my job, is not to predict, but to align with those flows using rules, data, and risk management. In periods like this, patience is a strategy, discipline is an edge, and flexibility is a requirement. We stay long where trends are bullish, we stay neutral where conditions are unclear, and we stay defensive where data tells us to. As always, we'll continue to let data guide our decisions, not headlines, not fear, and not greed. Thanks for watching, and I'll see you in the next market update. If you found this week's video helpful, drop a like, hit subscribe, and share your market view in the comments.